Looking at the quarter, I really think investors are going to continue to focus on the macro data points. I mean, one of the things you really need to get these stocks moving up in a sustained way, you need a stronger or a better supply-demand balance in China as far as steel is concerned. And we continue to see steel prices move down in that economy. And also, very importantly, you need the dollar to show signs of weakening again, particularly against the euro. So this is going to make it difficult for U.S. Steel, for Letter X, to act very well, pretty much no matter what they say tomorrow.
Yeah, not easy. And by the way, I was just looking back at the numbers. I'm absolutely amazed. In 2008, U.S. Steel earned $17.91. This year, if you look at the average forecast, $1.58. In other words, down 90%. When will we, if ever, see a rebound to those peak-type earnings?
Well, I mean, that's a very good question. You get the kinds of macro data points lined up again like they were in 08, where the world was going to grow at 5 or 6%, and the dollar was weakening aggressively, and there's a shortage of steelmaking raw materials. Supply was relatively tight. We don't really have any of those factors right now. Could we get them again? I mean, sure. I mean, there's plenty of opportunity for growth in steel globally over the next decade, but there's an awful lot of uncertainty right now in some of the major steel-consuming markets.
Yeah, there certainly is. J.C. Parets on the charts. We're just talking about the earnings down 90%. The chart, the stock is down 90% as we saw those earnings collapse. As you look at the chart right now, is there anything you can say about this that might be cause for buying it?
Well, we actually think that U.S. Steel is attractive, especially from a risk-reward standpoint. $18 has served as nice support over the last couple of months. And if you go back to October, we saw a 50% rally from prices below $20 a share. And it ran into a declining 200-day moving average in January and February, and that's tough to break through. The recent correction in price has actually allowed for that 200-day moving average to flatten out, and I think that opens the door for a sustainable rally from current prices.
So in theory, with a triple bottom at 18 bucks, you would be more inclined to play it from the long side. All right, Andrew Keene, on the options, I have a sneaking suspicion you'll take the other side of that trade.
Yeah, I'm going to agree with Mark. The declining, business model and steel decline, especially in China and around the world, is going down. This stock is straight down. JC didn't mention the fact that U.S. Steel is trading under the 20, the 50, the 100, and the 200-day moving average. He could take a flyer here and put a stop under $18. But I think tomorrow, U.S. Steel, using the measured move targets and the at-the-money straddle, it's implying it goes to either 18 or 20. I think it sees 18 first. I think weak stocks get weaker. We saw this from AK Steel and a couple of other steel stocks. These are weak stocks. I think as a day with 18 tomorrow, I bought the weekly 19, 18, 17 put fly. I'm risking $22 per one lot. I can make it $78, 4-to-1 risk versus reward. I think as a day with 18 tomorrow.
In other words, you're spending 20 cents to potentially make 80 cents if this thing goes to 18 bucks from where it is right now. Call it down about another dollar and change.
Exactly. That's the measure move target based on the at-the-money straddle, and that's where JC talked about having support down at this 18 level. I think U.S. Steel will go lower. I don't think how much lower it's going to go. It's implying a 6.5% move, either to the upside or the downside. I think it's going to the downside.
Now, this is interesting. Mark Parr, you are not an options trader. You're a fundamental analyst, and yet I see you nodding your head. You kind of like the sound of this argument.
Well, yeah, one thing I can say, I think both of those arguments that we've heard, have validity to them. The only thing I could add to the discussion at this point would be that we are looking at a fairly significant snapback in scrap prices for August, and that could put some support underneath these stocks in the near term. And also, the mills have been having some success recently in getting some price stability and even some upward momentum in pricing. So, I mean, I don't think either one of those things is enough to offset the global macro uncertainties. But, I mean, from a trading perspective, these stocks are, all U.S. Steel and the entire group is really beat up. And, on a day when the market's looking for a little good news on some cheap stocks, these stocks could move very quickly.